Hey everybody, Joshua Phillips here with Churchill Mortgage. Hope you're having a great day. Today is January the 23rd. It's a Friday. We're getting ready to come into some snow this weekend. So hope you stay warm. But thought I'd start out with something a little bit humorous. Hopefully made this image with Jim and I actually, my wife and I, on a snowmobile going out to help people look at homes. And this was what I was imagining a larger snow vehicle might look like. So, hey, hope you're staying warm and safe as we head into this weekend. Well, let's jump into mortgage news. So, I always like to start with a headline. This was a headline from 2 days ago. Mortgage refinances surge again, but rates are now suddenly jumping higher. Now, we are in a time where, you know, news from Trump can really move the market. And that's what this was related to a couple days ago when Trump was talking about taking Greenland and maybe taking it by force. And I think that really spooked the markets. I think we had a day where the Dow was down 900 points. And so that's really what this is referencing. But it is a good reminder that rates are not always going to go down. They're also not always going to go up. And I think I've gotten in the mindset where, hey, rates are just improving, but that's just not always going to be the case, as we have seen rates tick up off their lows from a couple weeks ago. They are up just a little bit. Now, let's come over here and look at our mortgage-backed security chart. This is where we look most directly at what mortgage rates are doing by looking at a mortgage-backed security chart. So mortgages are bundled and sold as securities. And what we want to see, if you're looking at this chart, this is a Japanese candlestick chart. Green is good and red is bad. And the higher the security price, the better mortgage rates are doing. Again, this is a Japanese candlestick. Ask ChatGPT about that if you want to learn more about that. But it gives an idea what things are looking like. Again, we want to see green. Now, January 9th, best day we've had in 3 years. That was probably about the time I made my last market update, was right about then when mortgage rates were kind of surging to their best levels. And since then, we've kind of hit this level of resistance and we've kind of pulled back down. And now we're kind of just skirting along the edge of the moving averages. Now, this is the last 90 days, but we really got to pull out further to kind of see more of the picture. So here's what the last year looks like, as we have seen mortgage rates improving up until about September of last year. And really since last September, so September, October, November, December, so the last, 4 or 5 months, rates have been pretty flat. They have not moved much. What you're seeing the last 4 or 5 months really doesn't represent more than a quarter, maybe 3/8% change in interest rate from high to low. So honestly, it's been pretty boring, or maybe we could say it's just been steady. So, I mean, what to expect in the future? Maybe more of the same, where rates are not really improving dramatically, but they're also not getting worse. So let's pull back here to the 3 month chart. So again, kind of skirting around these best levels in a while. Let me pull up one more Freddie Mac. So Freddie Mac has been doing a where we go here? Sorry about that. FreddieMac.com. So Freddie Mac has been doing a weekly survey for like 50 years. You can literally go on there, I guess, since 1971. That's even longer. That's like 55 years, about how old I am. And but they do a weekly survey, and I would say it's kind of the gold standard of what to expect with mortgage rates. These rates do come. I was clarifying this recently with a client. These rates do generally come with a 1% discount point or 1% origination fee. So when you're seeing rates generally online, you can assume the norm is to pay 1 point, which is, again, that's just the norm today. So this gives you an idea of kind of, again, rates have been declining, but they have been kind of flat. I mean, you're looking at, back to what, September, 6.26, today 6.09. Less than 20 basis points that rates have changed since last September. So, but that's a good place to go if you want to kind of get an idea. And of course, 15 years, great. If you can do a 15-year on a refinance or a purchase, that's amazing. You're going to be solidly in the fives. You can also maybe pay some extra points and get your rate into the fives on a 30-year in a lot of situations. I would also say these are conventional rates, FHA, VA rates are a little bit better on the 30 as well. So, as always, mortgage rate quotes are customized to your situation. There are as many as 40 or 50 factors that go into an accurate interest rate quote. So always feel free to reach out to Amy, myself, or Jesse. We are the Phillips team here at Churchill Mortgage. I always like to say when you're working with the Phillips, you're in great hands. But reach out to us. We can talk you through, specifics. Also, rates change a little bit day to day, although not much, and walk you through that. If you haven't been pre-approved, we can walk you through a pre-approval. And if you're looking to refinance, maybe you got a loan at 7.25, 7.5. We've got clients that did that, and we've started to refinance those clients. So feel free to reach out to us. Anyway, hey, stay safe. If you need a ride on our Churchill Mortgage snowmobile, we are here to help you. Have a great weekend. Take care. Bye bye.